Happy Wednesday out there, folks. This is Darius Dale here to present our macro minute for Wednesday, August 3rd, 2022. Starting with markets, we have stocks up this morning, commodities up, crypto up, dollar flat, global bond yields up. Market moving headlines. Markets are breathing a sigh of relief this morning as Nancy Pelosi left Taiwan without provoking a huge Chinese backlash, and markets reacted with that sigh of relief. She praised the island's economy and signaled even closer ties with the U.S., including a possible trade deal. China is arranging a military response, including missile tests in the waters and airspace around Taiwan, plus some trade curbs. So more of the same with respect to the show of force in and around Taiwan out of Beijing, but not actually doing anything that matters. Shifting gears, the Q3 quarterly refunding announcement out of the U.S. Treasury suggests that Treasury Secretary Janet Yellen, and by extension the White House, still actively engaged in inflation fighting. And this is into the midterms, which are a few months away. The U.S. Treasury reduced its quarterly sale of longer-term debt for a fourth time in a row, and laid out plans for cuts to a range of maturities in the coming months, with the 20-year bond singled out for the biggest trimming. The department will sell $98 billion of long-term securities at its quarterly refunding auctions next week, down from May's $103 billion. This marks the longest string of declines in about 8 years. So deficit reduction continues to be the name of the game. That obviously has a negative impact on both nominal and real growth. Big movers this morning at Bloomberg Agriculture Index up 1% to down to off for 2% month over month. WTI crude oil up 2% to off 9% month over month. So as I mentioned last week in the Around the Horn and all last week, certainly in response to the market's interpretation of what, in our opinion, is a misinterpretation of the Fed dovish pivot. You can't have your cake and eat it too. If markets are going to rally because they think the Fed's going to pivot dovishly, you're going to have incremental commodity price appreciation. You're going to have incremental widening of break evens, rising of inflation swap rates, and eventually the Fed will be moving further away from achieving its objectives, which, as we saw from Daly, Evans, and Mester yesterday, and then Bullard as well, these folks mean business. So it's our point that we think the markets are mispricing this timing and ultimately the efficacy of a Fed pivot. All righty, let's transition to our volatility adjusted momentum signals and probable ranges. We have the U.S. dollar index here, bullish fam still, that is oversold. Gold, bearish fams, that is overbought. 10-year nominal Treasury yield neutral VAMs finally bouncing off the lower bound of its probable range. You got 21 basis points downside, 29 basis points of upside there. Bullish FAMs, high yield credit spreads, still oversold there. S&P 500 neutral VAMs, you got about 70 basis of upside versus 6.6% of downside. Fixed bearish VAMs in the middle of its range. NASDAQ 100 neutral VAMs, you got about 1% of upside versus 9% of downside. Russ 2000 neutral VAMs, that's overbought. Bitcoin bearish VAMs, 3% upside versus 14% downside. Ethereum bearish VAMs, you got about 5% upside versus 23% downside. Shanghai Composite neutral VAMs, that is oversold. WTI neutral VAMs, that's in the middle of its probable range there. Not responding with the kind of reflation we're seeing even in broader commodity markets and obviously and equities. So this is something to watch here. Is it signaling something more deleterious from a global economic perspective? I think that we have to keep our eyes open for that potential outcome. And then lastly, ag bearish FAMs did bounce off the upper bound of its probable range. You got about 2% of upside versus 6% of downside there in the range. And then lastly, industrial metals bearish FAMs still overbought. So with that, Darius Dale presenting our macro minute for Wednesday, August 3rd, 2022. I'm actually going to be on Real Vision, the daily briefing tomorrow instead of this afternoon for some scheduling conflicts. So catch you on the Real Vision daily briefing tomorrow, Thursday, August 4th. Cheers.